Hello and welcome to Earnings Echo. We put together the most important information about Rubrik.
Right, and today we're unpacking a pretty massive Q1 financial report for them.
Yeah, we're looking at exactly how this enterprise data security company just crossed a major profitability milestone.
Well, let's just get straight into those Q1 hard facts, because they crushed expectations across the board. Total revenue hit $387.1 million.
So that's up 39% year over year.
Exactly, up 39%. And their subscription annual recurring revenue, the ARR, reached $1.57 billion.
Which is another massive jump, up 32% year over year. But the real headline here has to be the bottom line.
Yeah, non-GAAP earnings per share came in at 16 cents.
That is a clear beat. They completely blew past management's guided metrics with that 16 cents.
And you saw how the market reacted. The stock immediately surged to around $77 a share after the release.
Right, but what about the updated full-year forecast? Did they raise guidance to match this momentum?
They did. FY27 guidance was raised across the board. They're now projecting subscription ARR to hit up to $1,862 million.
And total revenue up to $1,648 million. So they aren't expecting a slowdown at all.
No, not at all.
But I want to push on the operational mechanics here. How do you just suddenly unlock that kind of profitability? What actually drove the massive margin expansion this quarter?
It really points to their cloud transition nearing completion. Think of it like building a toll bridge. The heavy upfront engineering is done.
So the concrete is poured and now they're just collecting tolls.
Exactly. Cloud ARR is now $1.39 billion, which is up 43% year over year. That makes up 89% of all subscription ARR now.
Wow, 89%. So because they're past that heavy lifting phase, new revenue just drops straight to the bottom line?
Right, which perfectly explains the profitability metrics. Their non-GAAP gross margin expanded to 82.9%.
Almost an 83% gross margin. And I saw the free cash flow more than doubled year over year, too.
Yeah, it hit $73.6 million. That's a 19% margin.
I think it's also crucial to highlight that non-recurring material rights revenue was only $8.5 million this quarter.
Which is basically a leftover accounting quirk from their legacy software model.
Right, so seeing that shrink to just $8.5 million proves the core subscription engine is genuinely driving this 43% normalized revenue growth.
Absolutely. And you could hear that operational success in CEO Bipul Sinha's tone on the call. He was highly confident.
I'm sure. Did management highlight any specific product adoption driving this?
Yeah, they heavily emphasized strong adoption of what they call agentic cyber resilience.
Let's unpack that because it sounds a bit buzzword heavy. How is that actually performing?
Well, looking at the numbers, it's selling fast. They specifically noted the identity resilience segment.
Right.
It scaled from 0 to 900 customers, generating 50 million ARR in just 4 quarters.
Hitting 50 million in recurring revenue from a standing start in 1 year is staggering, but I have to pivot to valuation here. At $77 a share, you're looking at an enterprise value of $15.2 billion. So what kind of expectations are baked into the stock price at this point?
We could look at the reverse discounted cash flow breakdown for that. Now, a reverse DCF is obviously not an exact science.
No, but it reveals what the market is pricing in.
Exactly. At that $77 share price, the market is currently pricing in a 24.3% free cash flow compound annual growth rate over the next 10 years.
At 24.3% KGR for a decade. That is a highly aggressive expectation. They're trading at 51 times forward free cash flow right now.
It is a premium multiple, but look at the underlying mechanics.
They're growing revenue at 39% with almost 83% gross margins.
Right, and they only have a mere 2% penetration into a $50 billion total addressable market.
So when you factor in the sheer size of the TAM, that 51x forward valuation actually starts to look highly achievable.
It really does. The runway is massive.
Yeah. So, to summarize the long-term investment story for you listening, the most important echo you need to take away today is that Rubrik has successfully crossed the cloud transition inflection point.
Yeah, they've completely unlocked massive operational leverage.
Exactly. But I want to leave you with a final thought to mull over. As they shift from just storing data to deploying AI agents that actively secure identities, are we still valuing a data backup company, or are we looking at the architecture for the next dominant enterprise security platform?
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.